right now the entire interview with Kevin can be seen on toop.tv. So go there and watch the full interview. It's a lot of really good material in there. Now joining us from Sydney, I think it is, the Senior Research Analyst Cameron Kusher from RP Data. And where are you at the moment, Cameron?
I'm actually up in Brisbane at the moment, so I'm joining you from up in wet Brisbane.
Okay, tell me about what's happening with the market.
Well, what our results for August showed that across the combined capital cities, during the 3 months to August 2010, property values in the capital cities were actually down by 1.2%, so it showed some easing in the market. And during the month, values were actually flat with no change. We're looking at a median price across the capital cities of $457,000 for the combined houses and units, $485,000 for houses and $417,000 for units. So the evidence is certainly suggesting that the market is slowing. There's less activity, there's less buyers, and property values are pulling back somewhat. For the remainder of this year, we're expecting, though, that value growth will be quite flat generally across the national market.
Cameron, no bubble burst?
Certainly no bubble burst. We've still got that strong population growth, and we've seen over the last few months that housing finance commitments continue to fall, building approvals continue to ease. So, you know, if that bubble is going to burst, or the alleged bubble is going to burst, what we would need is a huge spike in unemployment. Unemployment's sitting at 5.1%, so that doesn't look particularly likely, or a huge influx of supply, and that certainly doesn't look likely at the moment either.
Now, what about the spring supply, though? There has been a bubble come through with the backlog, with the hung parliament and the double grand final is what we're finding.
Yeah, certainly we're finding that listings are a little bit higher than you'd probably like to see. And there's not particularly a huge amount of new listings coming onto the market, but there is a hangover of listings that were probably listed 6, 9, 12 weeks ago that are still on the market and finding it difficult to move at the moment. So, you know, the excess of supply in the market is a little bit concerning, but for people out there looking to buy, it gives them more options, and particularly as those properties take longer to sell, you know, the vendors potentially get a little bit more desperate to get that sale and may consider further discounting on their price. So it's not all bad for someone that's active in the market at the moment. You've got less competition and you've got more stock to choose from.
Cameron, what about time on market? What's happening in South Australia?
What we're finding in Adelaide at the moment is that the average time on the market for a house is at 45 days, and for a unit it's 37 days. And we've started to see a little bit of an increase in time on the market for both houses and units during the last probably 4 or 5 months. And what we're expecting is, as the market continues to slow, we'll see a further increase in the time on market. So it's not too bad at the moment, 45 days for houses and 37 days for units, but you know, maybe expect that to increase a little bit in the coming months.
And how are the first home buyers going?
First home buyers are really making up a very small portion of the market at the moment. On a national basis, the figure was down to, I think, 15.5% of all owner-occupiers nationally were first-time buyers. So they're really not playing a big part in the market at the moment. And, you know, there's good reason for that. A lot of the demand for this year was brought forward into last year because of the low interest rates and the first homeowners grant boost. Also, the strong property value growth we've seen since the end of 2008, it's making it more expensive for them to enter the market. And the rental growth until recently hasn't really been there. So the gap between the price of what you'd pay to get into your own home and what you pay in rent has increased quite significantly. And, you know, people are probably saying, well, is it really worth me jumping into the market right now?
So that was entirely predictable in many ways. What do you think about interest rates? You're the guys that supply the information to the Reserve Bank. Can you doctor it to make sure we don't get those rates go up again?
Well, we can't doctor it, but a lot of the data, particularly a lot of the housing data, isn't particularly glowing at the moment. As I sort of mentioned, housing finance is quite weak. You've seen that our property value growth data is showing that it's quite flat and falling over the last quarter. Building approvals are down. So a lot of the housing-related data actually isn't that strong. I guess what they're more concerned about is inflation, and those figures come out at the end of the month and will probably be key to any decision they make. We're still seeing the unemployment rate is very low at 5.1%, and we're also seeing that consumer confidence, those figures came out this week, and they were showing that the consumer is actually quite confident, but they're not that confident because they're not going out there buying properties, and retail trade isn't growing particularly strongly either. So It's a little bit of a weird situation at the moment, and I wouldn't be surprised if perhaps the RBA holds off again next month, especially after what they've done this month, which is probably good news leading into Christmas.
So, Cameron, is that your tip for the week?
I guess that's probably my tip for the week. It will probably depend a little bit on that inflation data, but at the moment I'm potentially leaning to the RBA holding off on lifting interest rates again next month.
Cameron, been great talking to you. We'll talk to you soon. And on that high note, as in the low note on interest rates, we'll leave you to it. Thanks for coming on.
Thanks, Anthony.
Now we go behind the blinds.